there, Maverick Traders. This is Rob Reinhold. I'm joined by Mr. Ankit Sharma, and it is the Currency Room. We are heading into the last week of October, and we've got a little bit of October left into next week, and then we turn the calendar and go to the next month and close the books on October. So let's jump into it. In this session, we're going to go through the previous week, break down the numbers, break down the news, and see where the trends are. We're going to then take a look at the current market. We're going to score all the currencies on both a trend score and a velocity score. Then we're going to take the strongest and we're going to pit them up against the weakest. We're going to do those currency crosses and look for some trading setups for the week.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's get ready for next week.
This week we had a stock market rout, and it's been in a rout for a little bit, and frankly, it's probably going to get worse. The way the stock markets work, when you get into this really strong down move, what you get is you get this cascading effect. You get this cascading effect of stuff like margin calls that force people to sell. The people that didn't want to sell, they're forced to sell. And then we've got this rebalancing going on to where people are constantly moving money around that's causing that to fall more, triggering stop orders, which then trigger margin calls that then trigger more stop orders. As you can see, it's this cascading effect. And typically, these don't end until we get what's called a capitulation, where we get the day that's just an absolute disaster, like a 5% down day. And what happens is all of those stop orders just get washed out, and we finally get down to a point where everyone who is going to sell has sold. And then we typically get a pretty good bounce off of that level. We call that a capitulation low at Maverick, and we think that we are building up to that. When that happens, who knows? I think it could be in the next week or two is my call, but the market is in a rout. We saw bond yields, and I really want to talk about both bond yields and the dollar, because this week, actually, let's just go into the news, because let's go to the news first, and then we'll come back to the dollar and the bonds. I'm going to focus first on the non-US dollar stuff so we can get that through. We take a look first at European manufacturing. It was mixed. It was mixed across European manufacturing. Some good, some bad. Let's check in on the Aussie. The Aussie had hotter than expected CPIs, and you can see the Aussie was a nice currency this week on the upside. Then we heard from the Bank of Canada, and the Bank of Canada kept rates where they were, and there really was no movement off of the Canadian dollar. What happened was expected, so we got an expected move, which was really nothing. We also heard from the ECB. They left rates the same, just as expected. Again, not a huge movement off of that. So that is the non-US dollar move. So mixed manufacturing, hotter than expected inflation in Australia. We heard from two central banks. Both of them kept rates steady and really said they're not looking to raise rates anytime soon, but they're definitely not looking to cut rates. That is the non-US dollar news. I want to point out a couple of reports here that just were stellar. Last week, we got a retail sales report that was incredible. Take a look at advanced GDP in the US. This advanced GDP number is phenomenal, 4.9% GDP. This is an amazing growth rate for a GDP report. And look, it's one quarter. I know it's one quarter, but it is definitely not what the Fed has been trying to engineer. Remember, the Fed has been trying to engineer to slow the economy down enough to where inflation cools off, to where we don't get a recession. It's called a soft landing. This number is not soft landing. We did get some core PCE price index out of the US that came in as expected. So we are still having really high growth, but we don't see the tick up yet in inflation. I want to go back to bond yields in the dollar. This week, we also got a much hotter than expected durable goods report out of the US. It was like 4%. It was just a crazy number. So all of these economic numbers have come out very strong. And All throughout this time, the dollar has been moving up and bond yields have been moving up. This week, we got all the news that should have caused the dollar and the bond yields to surge. If we got this news 2 months ago, we would have seen a huge surge. We didn't see the surge. What that tells me is that the bonds and the dollar are tired. It doesn't mean they're going to go down. It doesn't mean that at all. But right here, they're tired. So they're not getting any new money. Everyone who's already wanted to put money in those assets, they got the confirmation last week. It's kind of a buy the rumor, sell the news. The big question is, what happens in the next couple weeks? I think we're definitely pausing on dollar, pausing on bond yields at the moment. But is the next major move higher or lower? Ankit, what's your call on that?
I think that's a tough, interesting call at this moment because, looking at the narrative in the markets, nothing really has changed. Neither the Fed is changing, neither the economic numbers are changing. So I think we probably continue kind of being with the same narrative. I know the equity is looking a lot weaker, but I think that could be short-lived. I mean, we are still in the seasonality patterns of going to November, and everybody's still thinking about this end of the year rally. And I know that the buyers will likely to come in if the markets start to bottom out. I think there's a lot on the line with the FOMC, what the Jerome Powell said next week. I just want to remind that last year we bottomed out around the same time, at the end of October to November. Is that going to happen again? I think that's still in the cards here. So I think it's still pretty early to make that call if we're going to sell off into the year close, or are we going to get that rally because we are at that injection point. So I'm going to keep my bias aside and just be right in the middle. I'm ready to swing one way or the other, depending on what the price action tells us, especially next week with the FOMC. So that's really all my focus is. And after that, I think it'll be pretty clear where the market wants to go. Back to you.
Thanks, Ankit. All right, so let's jump into last week. Let's look at all the numbers that happened across the board. This is where we were last week. At the end of the week, we said, hey, dollar looks strong, Swiss franc looks strong, euro looks strong. And we had weakness in the Kiwi. And pretty much everything else was in the middle, but for the first time, we see the cryptos really starting to look pretty decent. So last week, we had a really, really ugly performance in the stock market. S&P down 2.5%, World Index down 2%. But take a look at cryptos. Cryptos did really good last week. Gold up. Oil was super volatile. Pretty much every day it was up or down 2 or 3%. By the end of the week, it was down 3%. Let's take a look at the S&P chart because this is free fall. This is what free fall looks like. And we get this free fall like we had back here, and then we get a little bit of relief. These patterns are called bear rallies. We love bear rallies. We got another 3-day fall. Any rally at this point, you must treat as a bear rally until it's wrong. So if we do get some sort of little rally next week, I think you want to be looking to sell that rally. Again, this is equities. We'll take a look at currencies, what you want to do. But equities, they're in free fall right now. And this is where I say we probably won't get a true bottom until we get the capitulation, the washout, to where all the margin selling is done, all the panic is over. Then we might be able to get a bottom. But until then, any rally should be sold in this kind of market. Last week, we got strong Aussie. Again, off of that CPI report, this might put the Bank of Australia back into play with the rate rise. At least that's what the market is thinking. But you can see that it wasn't a really great week, especially if you take a look at all the things that happened. I mean, equity markets moving 2 or 3%, oil moving 2 or 3%, crypto's up. These are not big moves in Forex. On a week like this, you would typically see at least 3 or 4 currencies up 1% or 2, or down 1% or 2. These are still really muted moves. And take a look at euro, pound. They're basically flat. We did see strength in the dollar and the yen. We'll take a look at all these charts. We did see some weakness in the CAD, but other than that, as you can see here, most currencies stayed around the midline. We only had 3 or 4 currencies that really had any sort of movements this week. Crypto had a great week, and especially Bitcoin. And really, the story is Bitcoin. That is the story. There are a lot of things kind of happening behind the scene here. Bitcoin started getting some money. Once the market really started to get shaky, Bitcoin started to hold up and start to move higher, telling you that people were actually looking at cryptos right now as a safe place to possibly put money. As the dollar is no longer going higher, is pausing, again, more of that money is finding its way. And there's also talk about a Bitcoin ETF that is a cash secured ETF that is likely to get approval that's also moving this higher. So I feel like Bitcoin was the story and it pulled everything else up. I think if you are going to be in cryptos, I think Bitcoin is still the story here. So the question is, did anything change last week? Let's talk about where we were. We were on a risk off, saying the market was at a -3 and likely to head lower. That's exactly what we got. We just looked at the S&P chart. We're still at a -3. This is still a very, very bearish market. The reason we talk about equities in this currency room is that equities are one of the correlations that cause movements in the currency market. Sometimes they're strong, sometimes they're weak. In the past, a week like we saw last week would have caused the yen to spike 1 to 2%. It was automatic. The correlations were very strong. The correlations are not as strong here, so we really need to find out, okay, what is actually driving these currency markets? Because a lot of the time in the past, it was equities, and that correlation has broken down. Next thing I want to take a look at is bond yields. Rising bond yields. This is saying, okay, are the currencies of safety, and the dollar is one of those, do they look like they're going to be moving higher? And you can see here, there's a really good support line right here, and we're holding it nicely. As I said earlier, we had all the news in the world to break higher this week, and it couldn't do it. That doesn't mean it's going to break lower. So when I asked Ankit the question, hey, do you think, which way bond yield is going to go? I think you're right, Ankit. I think we sit here for a while in this maybe 495 to 515, but I do think the next move is higher. I do think the next move is higher off of this. But for the moment, to me, this looks very sideways. We might drift down a tiny bit below this. So what that means is the dollar probably is going to take a pause as well. And that's kind of what we're seeing in the markets. The dollar's going to take a pause. Once this thing does break higher, the dollar rally will and should be back on. Here's the crypto market. And you can see back here, we got the cross of the 20 and 50. Didn't really go anywhere for a while, but a nice breakout here. We are getting a pullback. I think on a good bounce off this pullback, I think you can be a buyer of crypto, but really be a buyer of Bitcoin. That's really the only one that makes a lot of sense here. Hold your horses, people, because look at this schedule. Now, typically I go through this and I talk about all the major results or all the major reports that are coming out this week. If I did that this week, this video would be 2 hours long. There is so much. So I'm going to talk about Monday, only Monday, because Monday after the market's over, Corey will do his end of day video and he'll talk about what's happening on Tuesday. And once Tuesday's over, Ankit's going to do his video and he's going to talk about what Wednesday is. You guys get the point. There's too much. I mean, we have 3 central banks and we have employment reports. There's so much. So like I said, I'm only going to talk about Monday. Take a look through this list. You can see that we do have the FOMC on Wednesday. We're going to be meeting live for that as a firm. We're going to be trading that live as a firm. But let's talk about Monday. Chinese manufacturing, which hasn't been a huge deal lately. It has, in the past couple of years. Right now, it's been hovering about 50. If this number comes out a lot above or a lot below, yeah, there'll be a market move. But really, it's about the BOJ. Dollar yen is at 150. It crossed above 150 this week. Every time in the past 6 months, we've crossed, in the past year, every time the dollar yen cross has gone above 150, the Bank of Japan has intervened. We ticked up to about 150.80, and then we backed off, back down to 150 again. Now we're trading a little bit below. Here's the question. What is the Bank of Japan going to do? Are they going to say anything? And if they don't say anything, does that mean that the yen falls apart? Because the yen's had some recent strength here. I think this is a very critical report. I typically say you can sleep through the Bank of Japan. You cannot sleep through this one if you're trading yen. This is going to be a big, big move. And to the upside and downside, we don't know. But let's take a look at the chart and see if we can get some sort of indication. I'm going to let all of the other news reports be talked about in the end of day videos this week, just for time's sake. Tons of news this week. Be ready for it. And EURCAD, I think you said earlier, this is going to change daily. Based on all the news we have out, we could see daily changes in trends. I mean, what do you think about that?
Absolutely. I think that's the takeaway for this week, is that the movements are going to be driven by news events. That is going to be the leading factor. And again, we have so many currencies. It's almost every currency that we have news data on. So it's fair to say that those movements can take place either way. So you really have to look at what the numbers are and where the movement happened. But I don't want to go in with a strong bias this week, because I think anything can happen. Dollar can go up and down. I mean, we can see big moves in Japanese yen. Again, there's a big question mark. If I take a look at all these currencies, there's a big question mark on where those will go. So I think that's where we need to be, and make those adjustments as we move along. You know, once we get some data out of one currency, then we can move on to the next one, and that should probably set the tone for the currency for the rest of the week.
Thanks, Olga. Let's take a look at each currency one by one, and we're going to give them all 2 scores: a trend score, kind of a longer term score, and a velocity score, a shorter term score of what's happening right now. I'm going to break down crypto, and then Olga, you'll take the Forex. As you can see on the chart here, Bitcoin, once it broke out of this area, became a buy. We based here, we ran up, and we've had a nice extension here. And then it's clear that, okay, we are done on this leg. This run is done. Bitcoin's going to take a break. Now, look, we don't know that it's going to take a break and then run higher, but we do know that things in uptrends, most of the time, tend to take breaks and then move higher. So if this uptrend is still intact, we're either going to get one of 2 things. We're going to get a pullback where the price comes back down to a reasonable level. And when we take a look at the technicals, we really don't have any level to come down to until about 30,300. That is like 4,000 points away. I don't think that's going to happen. So the next question is, okay, where is a logical place to look for a pullback? I'm going to look at basically the 50% Fibonacci line. So I think somewhere around like 32.5, I'm going to start looking somewhere in this area for a good pullback opportunity. And then when it bounces higher, I can jump on it. Now, we don't know that it's a pullback. It could be a base. And if it's a base, it's even a better setup to where it goes sideways here, but you got to wait for a breakout in a base. So that breakout will be just above 35,000, wherever these 2 highs are. That's going to be the next entry point on Bitcoin. So Bitcoin is by far the best currency in the crypto space. If we come over here to Bitcoin Cash, okay, look, it still looks okay. But again, we want to buy the best performers right now. And there's nothing in this chart telling us that Bitcoin Cash is going to become the best over the next couple of weeks. So yes, it looks okay, but I don't want to touch it. Here's Ethereum. Okay, again, we just barely broke out of our October high. Remember, Bitcoin broke that like a month ago. Yes, we are putting in some nice base action. Okay, for someone who said, I really want to be in Ethereum, okay, maybe you start looking at 1860. If it can break out above this area after this base, sure, take a look at it. I still think Bitcoin is the better buy, because if Ethereum is running, I'm telling you that Bitcoin is most likely running. They are highly correlated assets. And here's Litecoin. We aren't really even above our October high. So I just don't see, as you're looking to buy something that's the best, this is definitely not the best. It's still looking better than it was, but it is not my favorite crypto here. So the story is, looks like Bitcoin is a place to be. If you don't want to be Bitcoin, then Ethereum number 2, but that's about it. Let's go into Forex.
All right, so let's just jump into some charts here for the Forex and start with the dollar. And again, this is one of the currencies that I know a lot of traders are sort of frustrated with, because every data has been pointing out to the upside, but dollar has not been able to break out. And just like Rob said earlier, this is something that is likely to just drift sideways until it breaks, big way one way or the other. So right now, this is not the currency that you want to short. But at the same time, it's not the currency that you always want to go long. I think buying the dips on the dollar seems like a good play here. But I think I don't want to short the dollar here, because every time you think the dollar is going to roll over, guess what? It goes up. So I think you got to be really cautious. I think as we go into the FOMC on Wednesday, I think the dollar is the one that I'll be primarily looking at for a breakout one way or the other. So for now, let's just keep this at a +2, but the velocity is not really there. Now, looking at the Japanese yen, which we always compare, we always like to compare what's really moving. And I find that interesting that this week, actually, the yen has outperformed the US dollar. So this is slowly trying to break out. So as we have our, bearish setups for the yen, I think this is a time to sort of take a step back off of that. Can the Bank of Japan accelerate this move higher or roll it over? I think we have to wait till Monday night. But right now, at this point, I think this could go either way. The score system has now come to a +1, and we have a velocity there. So I think we want to be cautiously bullish on the yen, but I'm not willing to jump on a bearish setup yet until we go through Monday night with the Bank of Japan. Now, Swiss franc has been the biggest outperformer. As you can see, we had a massive run. And if I take a look at the risk-off sentiment, I mean, the Swiss franc is the one that's actually acting like a safe haven currency. But this week, you can see it did pull back. So after having a big move in the last 30 weeks, it's sort of pulling back. But at the same time, it's not fallen below those moving averages. This is a tough one because we like the trend, but the velocity has turned really negative. So I think this is going through this pullback. We don't have a confirmed sort of a rollover point yet. I think we'll have to wait and see. There's a lot of factors that Swiss franc is riding on, and I think if you want to be shorting the Swiss franc, we need the markets to calm down. We need to see the VIX go lower, gold pull back. I think that will be the ideal condition for the Swiss franc to sort of pull back. But as long as the market stays on edge, I think we want to be steering clear from the Swiss franc. It looks extended, but I think for short term, it's pulling back, which again can give us an opportunity to get in. Now, going into the euro, and we talk about this correlation between the Swiss franc and the euro, and you can see that there's a lot of back and forth taking place. But euro has been more stable. I mean, this week, the Swiss franc pulled back a lot more than the euro. But overall, in a trend, we've seen the Swiss franc actually done well. So I think euro and Swiss franc kind of the same boat. They're holding in. We had the ECB press conference this week, and guess what? The euro is still looking strong here. So let's just keep this euro as a +1 to +2. I think this is definitely a place to be more long than short. And we take a look at the relative strength of weakness. Pound is the one that is still looking the weakest. And I think I want to highlight that for the last year or so, pound has been the strongest currency. I can't say the same case anymore. It did pull back and it just sort of consolidating since then. So I think eventually pound will break lower based on the setup that we are seeing. We have Bank of England next week, and maybe this will drive some of the movement. But I do like pound more on the short side than I do on the long side. The buyers are not coming in to the British pound. As you can see, they're coming in for the Swiss franc or for the euro. So let's just keep a close eye on the pound on the short side. Now, taking a look at some growth currencies, and this is an interesting one. We'll take a look at the dollar CAD chart as well. But this is the correlation that we always get. Dollar usually and the CAD do kind of perform similarly. We don't see a whole lot of negative correlation. But this week, they totally went the opposite way. CAD is breaking lower, but the dollar is holding steady. So we have that negative correlation there. So I think we have to watch this one next week. We had a nice little jump today in oil markets, but we're not really seeing that in the CAD. So is the CAD really ready to roll over? I think we have to wait till next week. We have to be cautious on this one because a lot of times we see this pullback and they get pulled up by strong dollar or maybe the strong crude oil. So I think we had to kind of watch that. But for now, everything is looking weak. So the CAD is really flip-flopping, going from a -2 to a +2, now to a -2. This one I'm putting on a watch here. And looking at Aussie and Kiwi, I mean, Aussie, if you take a look at this chart and you take a look at the broader market sentiment, it doesn't match. And I think this is a good example of just paying close attention to relative strength weakness. Aussie's not in a free fall. Markets are. So what is that telling me? That's telling me that if the markets sort of stabilize a little bit here and rally, I think the Aussie can really break out. So I'm putting in an Aussie on a stronger list compare as far as the relative strength goes. I think this can do better, especially if we can get the market to kind of come along with it. But right now, I don't like this as a short. And Kiwi, on the other hand, looks a lot better to me as a short. And if we can take a look at Aussie-Kiwi pairing as well, we can clearly see that the Aussie is outperforming the Kiwi. And if we take a look at inflation numbers, I found that interesting. The inflation numbers out of Australia was hotter, but inflation numbers out of New Zealand was weaker. So again, this is definitely putting the RBA more on the hot seat versus the RBNZ. And I think that's really where the Aussie can outperform the Kiwi. So Kiwi is nicely low basing here. And I think as we go into this next week, we can look at Kiwi more on the short side, especially if you're trying to pair that against dollar or some of the other currencies. On the other hand, if the market rallies, I think we're probably better off with Aussie as a long. So that's really where we are.
Thanks, Ankit. That's a great breakdown. And I really like your call of if this market rallies, that Aussie is ready to go. I'm with you 100%. If we get a bottom in the stock market and we start to get in some animal spirits and some rallies, I think the Aussie is where you want to be long. Here's the problem. I don't think that's going to happen. I think the market is going to continue to fall until we get that capitulation. And if that's the case, then I've got three currencies that I'm really focused on: Euro, dollar, and Swiss franc. Now, we just took a look at all these charts, and you can see the dollar was flat. The Swiss franc was falling, and the euro was actually pretty flat too. So to me, dollar, euro against CAD and Kiwi. Now, again, this is the longer term trend score. Where are things going right here, right now? Well, we got Aussie showing some strength. Like I said, if the market bottoms out, I think this is where you want to be. But out of those three currencies that I just talked about, the dollar, the Swiss franc, and the euro actually scores the highest. So I'm putting my number one currency to go long this week is the euro. My second currency to go long it is Bitcoin. And then I'm going to give 3 to the dollar. But I think the dollar is going to be flat here for a little bit. What looks the weakest? Well, the Kiwi, which was one of my favorite on the weak side, doesn't look weak right here, right now. CAD does. So here we are. We've got all of our relative strength and weakness done. Now it's just a matter of taking those pairs and pairing them up. So my number one trade for this week, the first part of the week, is going to be EURCAD long. Let's take a look at it. Would having more trading capital help you meet your trading goals? Maverick Currencies is the oldest US-based Forex and crypto prop firm. We fund traders just like you with 5- and 6-figure accounts where you keep 70 to 80% of profits. Click the apply link on the top right of this video to start the process. This will take you to a 4-minute video that explains the trader position, and you can read a list of FAQs that answer pretty much all the basic questions you have. After that, if you're interested, fill out an application, and then you'll watch the full-length recruiting video and schedule an interview with our recruiters. Are you our next trader? All right, so EURCAD. Let me go to a daily chart. Let's just make sure that the daily chart is showing us everything we want. All right, so we are going to have some overhead resistance here pretty quickly here. So we can expect that somewhere around the 147.50 area up to 148, we're going to have resistance. That is 140 pips away. We just got a nice breakout out of a 4-day base. To me, this trade looks really nice here. I think we're going to have a move up into this next area, 175 to 147.50 to 148. Everything looks good here on a daily chart. The question is, shorter term charts, how do they look? this thing looks great here. This thing looks good. So I'm going into next week with EURCAD as my favorite. Now, again, this is if the markets continue to fall. I like this. Let me also pair up Euro Kiwi, because let's say next week the CAD is actually showing some strength and the Kiwi is showing some weakness. Well, I want to be able to flip over to this one. So here's a 4-hour chart. Where is the setup? Well, the setup is we need to break out above these last 2 points here. So it looks like every time around 182.50, 182.50, we start to hit a little bit of resistance. I think you want to just look above there, 182.65, 182.70. That to me is a really good entry point off of a high base breakout on Euro Kiwi. So these are the two things I'm going into at the first of the week. But as Ankit said, this week has got so much news, I'm not sticking to anything. I'm going to take every single day as its own separate little day and do my relative strength from top to bottom every single day. Ankit, what pairs do you want to take a look at?
Hey Rob, well let's take a look at some interesting charts. Dollar CAD. I want to highlight some charts so we know exactly what's going on in the bigger scheme of things. Now let's take a look at this on maybe a daily chart or a weekly chart, and I want to highlight exactly where we are, and trying to figure out what the CAD's going to do. I think you really got to pay close attention to the dollar CAD, because dollar CAD usually has been moving along the same lines. But when they diverge, big movements happen. But the question is that, are we at the point where CAD can now, underperform amongst the other currencies? Now, take a look at this area that we are in. We have rejected this area multiple times. So, this is again a clear call that, dollar looks better than the CAD. Should this chart start to top out, I think then I want to take my call off the bearish CAD a little bit, because again at that point dollar probably would look better. But right now, like I said, the dollar is looking a lot more stronger. But that's the area, 138.70 right now we are at, and on the top end, 140 is a key level of resistance. So you want to watch this very carefully as we go into next week. So that's the first one I want to point out, especially if you're trying to find out if the CAD will be a good short. Aussie Kiwi. Now, talking about the same correlation and relative strength of weakness, take a look at where we are. And we have retested this area multiple times. That 109, 110, it will be a clear level of resistance. If we break out above that, I think we can have a big run, especially going back up to a further high, 110.50, and I'm going to 112 as well. Again, we're talking about relative strength of weakness. You can see that where last year where we were, we had a major fall. So when these currencies deviate from each other, we see a big move. And usually these are the moves that insulate you from a lot of volatility, as long as you're following the relative strength of weakness. So I like it that from that perspective. We have to wait and see. I'm looking for that break of that resistance, and once I get that confirmation, I think I'll be ready to pull the trigger on the upside. And especially as we go into the RBA in a couple of weeks, I think there's a lot more pressure on RBA than to maybe talk about or be hawkish on their rate policy. So those are the two ones I am watching right now. But outside of that, like I said, I'm going in with a clean slate. I'm ready to swing either way. I know where we are right now, but as we move along on a day-to-day basis, if something is strong, I want to jump on it. If something is weak, I want to jump on it. I want to look at the velocity and see where the movements are happening and jump on that. So that's always key as we go into these busy weeks where things can change on a day-to-day basis. We need to be able to be flexible to make changes accordingly. Back to you, Rob.
Thanks, Ankit. Let's wrap this up. This week is huge. And look, you hear me say all the time, like, hey, this is a week to not trade as much, to pull back. I am not going to say that this week. This is the week to trade more. There's going to be so much opportunity this week. I think you want to be very active. And ramping up your activity to match the ebbs and flows of the market is very, very important. So I like this week quite a bit. I think it's going to be a great trading week. And I think every day is going to be a different day where you wake up, you run through your relative strength and weakness, and you may have totally different pairs on Tuesday than you did on Monday. And that's fine. Be flexible and just trade with the relative strength and weakness. That's it for us. Everyone have a great weekend. Goodbye.